As of the February 2025, there are 7 glove manufacturers and 3 glove equipment suppliers on Bursa Malaysia. The Malaysian rubber glove industry is a cornerstone of both the national economy and the global medical supply chain. It is an almost entirely export-driven sector, with Malaysia supplying about 60% to 70% of the global demand. During the COVID-19 pandemic, demand for gloves soared and the industry responded by ramping up production and increasing capacity. The surge in demand led to extraordinary results, but demand declined post-pandemic. The sector was then saddled with excess capacity. Looking at the sector revenue trends over the past decade, you can see that spikes during the pandemic years. While the spike is across the board, the larger companies, as represented by the Q3 or upper quartile trend, have a bigger spike. The revenue increase was much smaller for the smaller companies, as represented by the Q1 or lower quartile trend. Revenue dropped dramatically once the pandemic was over. You can see that their median revenue in 2024 is about the same as then in 2010. We can see a similar pattern for the profits both for the pandemic spike and the lower profits in 2024 compared to those a decade ago. The result is declining returns across the board, with the 2024 returns lower than those in 2010. Gross profitability is a metric made famous by Professor Novimax. According to him, this metric has the same power as price-to-book value in predicting returns of stocks. Based on this metric, the immediate future does not look good for the sector. Looking at the revenue and margin trends, you can see the current challenging position. Growth in the coming decade is projected to be single digits. This is a challenge for the sector, as it has excess capacity due to the expansion during the pandemic years. You can get a sense of this excess capacity by comparing revenue growth over the past decade with the asset growth. The challenge is not just top-line growth. There are cost pressures that prevent margin growth. Apart from rising raw material and labor costs, the excess capacity intensify competition so that it is harder to increase selling prices. The only positive point is that the sector is financially sound, with decreasing debt-equity ratio and improving current ratio. In summary, this is a sector with immediate to short-term challenges due to excess capacity and single-digits revenue growth. There will be short-term profit challenges, and I am not sure whether we can see an immediate turnaround for the declining returns. The only positive point is that the sector is financially sound. Now that you have a picture of the sector, I will look a bit more into the fundamental performance of Top Glove and CarePlus with reference to the Fundamental Mapper. The Fundamental Mapper is an app that evaluates business performance and investment risk, making complex analysis easy for everyone. It then maps the stocks into 4 quadrants, providing insights in an easy-to-see format. While both companies are of different sizes and fall into different quadrants, their positions suggest that they have poor fundamentals. I wanted to assess whether they can improve their performance and move to the goldmine quadrants. I will base my assessment on these 4 factors. You can see the relative returns of the 2 companies. Despite the difference in sizes, both suffered declining return comparing 2024 to 2010. This was because the growth in assets was much larger than the growth in revenue. This was due to expanding production capacity. You can see the impact of the excess capacity illustrated here. Are there opportunities to turn around? There are generally 4 profitability paths. The company can try to increase revenue, expand the margins, reduce fixed costs, and reduce its assets via capacity reduction. I have earlier pointed out the low projected demand for the next couple of years. You can see that for both companies, there has been large changes to the gross profit margins or fixed costs in 2024 compared to 2010. Remember what I showed earlier about margin and cost pressures. This makes it very difficult to expand its margin or reduce the fixed costs significantly. This is well illustrated when you look at the trends in the gross profit margins. The past 2 years' performance is about the worst over the past 12 years. I have so far looked at the improving returns from the numerator angle. The companies can also improve returns by managing the denominator or capital in this case. Can they reduce the assets? From an accounting perspective, if there are unused assets, the companies will have to write them down. The oil and gas sector, especially the drilling and offshore supply vessels companies, faced this issue and had to impair their assets. Both companies had some impairments, and I am not sure whether there will be further impairments. Asset reduction will have short-term pain. The main positive point is that both companies are financially sound. This will give them time to work out the overcapacity problem without having to worry about funding. Both Careplus and Top Glove experienced similar industry-wide trends. They expanded rapidly during the COVID-19 boom, followed by post-pandemic overcapacity issues. However, their responses and scale of impact differ due to company size, market positioning, and strategic flexibility. The key challenge is about right-sizing production and hoping for better demand to reduce the turnaround time. The issue is not financial, but operating risk. When you look at the current valuation metrics, you can see that there is not enough margin of safety. So far I have focused on the glove manufacturers. Would the three glove equipment companies perform differently? To give you a simple overview, I compared the return on capital for these three companies with those of Top Glove and Careplus. Looking at the past 3 years' results, I would not consider them more attractive investments. Whether they are glove manufacturers or glove equipment suppliers, this is a tough sector to make money. The information presented is for educational purposes only. Do you want to learn more about how to identify such stocks with the Fundamental Mapper? Scan the QR code to access it on the Sifu app. Thank you.